So it's good not to limit yourself. I was trying to get an Ives put filled for $140 today at a 29 strike. Couldn't get it done, so I segued into watching Warner Brothers again. Netflix and Paramount are both trying to do a takeover or buyout Warner Brothers, and the deals basically equate to anywhere from 27.75 per share to upwards of $30 per share from the Paramount bid. So Netflix will basically buy out all the shareholders at 27.75 per share, and Paramount basically is offering now $30 per share. So it's an ongoing little battle between both Netflix and Paramount for which one's going to win out on buying Warner Brothers and taking it over. But if you're a shareholder, you're going to be filled anywhere from 27.75 per share to $30 per share. So I decided to sell a 20, I think it was a 28 strike. Take a look real quick. Yeah, the 28 put. I sold the 28 strike put out the next month, basically expiring March 20th, and received $118. That's currently going for a little bit higher now. I get charged a small 65-cent fee from when I sell puts from Schwab. Anyway, that's part of it. So anyway, $118 is not so bad considering that if assigned, I'm going to be assigned under 27, 26.80 almost per share. And the buyouts between what I say, 27.75 per share up to $30 per share. Now, neither of these deals have been reached yet, obviously, and it may take months before it's finally passed and final regulator approval before it's approved. So I may have to bag hold for a little bit, but I don't intend to do that. I intend to sell call options. And so looking at the call option table, you got to change this out to calls. You could look at a 28 strike because I'll be assigned to under 28 because my strike was 28. So if I get assigned the shares by March, I'm just going to start rolling call options on it. And it's really lucrative now. If you look at that, the coal contracts out expiring 20 March, a 28 strike is going, the last contract sold for 145. You're going to multiply that by 100 because each option contract represents 100 shares. So that would be $145. And look at that open interest, 15,012 and daily volume of 148. So very lucrative to do options right now on Warner Brothers. So I'd done this previously. I was selling puts on it and closed them out for a gain like the next day, something like that. So I decided to do it again, being that there's this catalyst for it to be strong around the $28 plus mark based on the buyout offers coming from Netflix and both Paramount. So in that regard, I'm very flexible when I'm doing options. I look for opportunities, and I feel like Warner Brothers is a prime opportunity. Volatility spiking up, implied volatility sitting around 37.14% currently as a result of these two bids from Netflix and Paramount. So options on it are paying really fantastic currently. Anyway, that's something that I do, and I don't mind willing Warner Brothers and picking up some premiums. I had to free up some shares of JAAA in order to free up leverage to do this, and I'll probably do a second contract more than likely. All right, guys, take care out there. Bye.